Peter Lynch famously said that insiders might sell their shares for any number of reasons, but they buy them for only one. They think the price will rise. And the data on this backs Peter Lynch up. Stocks that insiders buy do tend to perform better than average, and although stocks that insiders sell do tend to perform worse than average, the relationship is far stronger on the buy side. Studies from Cohen in 2010 and the University of Michigan in 2000 both concluded that insiders who buy their stock in the open market tend to outperform the market. And it's especially the case in situations where the insider buys in an opportunistic fashion as opposed to more of a routine, regular buying fashion. In this video, I want to share where I personally look for large insider transactions. I want to share an example of one recent insider buy in a very well-known company that really ticks a lot of boxes in terms of what I would be looking for in a large and very interesting insider purchase. And I also want to share some tips for looking at both insider purchases and sales to get a better understanding of why those transactions might have taken place. If you enjoyed the video and haven't subscribed to the channel already, please be sure to do so. But with all that said, let's get straight into this video on insider buying and selling. Now, firstly, it's really important to remember that just buying stocks that insiders have been buying is not some guaranteed path to outperforming the stock market. It's really just maybe a filter for finding new ideas, and it's kind of an interesting place to start. You know, they always say to fish where the fish are, look for stocks in markets that are generally cheap or in areas where those stocks tend to outperform. And this is potentially another one of those interesting places to look. You still need to do your work on understanding the business, looking for a competitive advantage, partnering with talented and honest management and buying at a reasonable price. But oftentimes when executives in the company are putting a large percentage of their net worth into their own stock, it's a pretty good sign, and it's a very interesting place to hunt for ideas. In the US, directors and officers of the company are required to disclose any transactions that they have when they're buying or selling stock in the open market. That's done through something called a Form 4. Form 4s also need to be filed in cases where someone who owns more than 10% of all the shares outstanding makes a transaction. And there's a number of websites out there that pull together the Form 4s from all sorts of different companies to allow investors to search and kind of hunt for interesting ideas. The website I use personally is one called Open Insider. It allows me to filter on different sizes of purchases, what position that person has in the company, and I can also kind of type in individual stocks that I might be looking at just to see what's happening under the hood in terms of insider transactions. Now, a somewhat recent example which I thought might be interesting to share, and this purely is just for example purposes, this is not me telling you to go out and buy the stock or sell the stock or anything like that. It's just one that came on my radar that had a lot of the things that I kind of look for when putting weight behind insider purchases. And that was actually a recent investment by an insider in none other than Warren Buffett's Berkshire Hathaway. Berkshire Hathaway, of course, is unique for many reasons, but one of the reasons that it's unique in this case is because any kind of insiders who end up owning a bunch of stock in Berkshire, they're generally doing it through pulling money out of their own pockets and buying stock in the open market. Berkshire is famous for kind of not having any sort of stock option programs that incentivize their managers. Their managers are certainly incentivized and can earn a lot of money by doing well in their individual business units, but they're almost always compensated by cash payments as opposed to issuing them with Berkshire stock. So it was very cool to see that Greg Abel, very likely the future CEO of Berkshire, probably the front runner to take over from Warren Buffett, go out and buy a significant amount of stock in the open market back in October 2022. We can see here on Open Insider that Greg Abel bought stock in multiple chunks all on a single day in October of last year at prices ranging from $405,942 per Class A share to as high as $408,006 per Class A share. If we tally up all of those purchases, Greg Abel looks to have spent about $68.3 million to acquire an additional 168 Class A shares. That takes him to a total of 173 Class A shares. So a very, very significant jump up in his ownership of of Berkshire. Now, reportedly, Greg Abel is also the custodian for about $700,000 worth of Class B Berkshire shares for his family, but really kind of relative to this big purchase of Class A stock last October, that's a pretty minuscule kind of holding. This is a much, much more serious investment. Now, whenever I'm trying to put some of these big insider purchases into context, there's a couple of things I look at. We've already spoken about the way in which Greg Abel bought these shares. They're very unlikely to be options related. Rather, he just bought them in the open market with his and his family's own money. Secondly, I really want to pay some attention to how meaningful that $68 million investment is for Greg Abel. You know, is Greg Abel like the richest man in the world and worth $100 billion, in which case this investment would be really a rounding error on his net worth? Or is Greg Abel worth $100 million and, you know, this investment is very, very, very material? Well, Forbes estimates Greg Abel to be worth about $500 million. So to see him putting north of $60 million into Berkshire, it's certainly not the whole pie, but it is very significant to his net worth. And it's also quite significant to his annual income. Now, Greg Abel is one of the highest paid executives, if not the highest paid executive at Berkshire. If we look at Berkshire Hathaway's most recent proxy statement, we can see that during 2021, he earned about $19 million. So this is more than 3 years worth of that kind of income that he's sunk into Berkshire stock. Now, one of the other things that I always try to do when I'm sort of judging how much weight to put behind these insider purchases, aside from how material it is to net worth and that type of thing, is I always try and read the SEC Form 4 filing directly. Now, you can obviously see these big insider purchases from a site like Open Insider, but if I go to the actual Form 4 filing, often there is a reason kind of behind some of the purchasing that, you know, these insiders tend to lay out for us. In the case of Greg Abel, that reason on the Form 4 was listed as shares held of record by Gregory E. Abel, trustee of Greg Abel Revocable Trust, for the benefit of his wife, children, and other family members. So this looks like just a straight up purchase for Greg Abel and his family, which gives him really nice alignment with other Berkshire shareholders. But other times on these Form 4s, it can lead you down kind of interesting rabbit holes. A good example I stumbled across recently is in a theme park business called Six Flags Entertainment. They have been showing some huge insider buys on Open Insider, like in the tens of millions of dollars from very senior management. And if you look at the underlying Form 4s behind those purchases, you see some very interesting things. So with the Six Flags CEO, for example, the reason listed on the Form 4 for making this purchase in the open market is a stock purchase obligation included in his employee agreement, which is something I don't think I've seen before. And these types of things can lead you down rabbit holes to do a little bit more digging on any kind of weird stuff that's going on with senior management compensation arrangements. In the case of Six Flags, you actually can do some Googling and dig out these employment agreements for the likes of the CEO, where one of the elements of his employment agreement actually says during the period commencing at the beginning of the second trading day following the effective date and terminating 30 calendar days following the effective date, the executive shall purchase an aggregate of $10 million of common stock in open market transactions on the New York Stock Exchange. And it's not just on the purchase side that these Form 4 SEC filings can give useful context. It's also quite helpful on the sale side from time to time as well. Take Charlie Munger's investment in Costco, for example. He's been on the board of directors for Costco since the late 90s. He's been a huge proponent of Costco as a great business for a very, very long period of time, and even today talks very positively about Costco almost at kind of every chance he gets. So if you were just looking at something like Open Insider, for example, it would have been very strange to see in 2010 that Charlie Munger actually sold most of his shares in that business. Yet, if you read the reason on the Form 4 filing directly from Costco, you'll see that most of those shares shares weren't necessarily sold because Munger had a change in view on Costco's business or anything like that. Rather, Munger's wife had unfortunately passed away, and a large chunk of the shares that were kind of held in Munger's name for filing purposes were essentially distributed following Charlie Munger's wife's death. So like in that Peter Lynch quote right from the start of the video, there's often many more reasons for selling than there are for buying, and these SEC Form 4 filings can be really useful for trying to figure out exactly some of the reasons why these insider transactions are taking place. So there are some of my thoughts on insider buying, insider selling, and hopefully some tips and tricks that you find useful in your everyday investing. Buying stocks that insiders are buying isn't some sort of secret sauce to generating high returns, although it does seem to be kind of a basket of stocks that does better than average from what I can tell in the research. So it's an interesting place to hunt, but you really often do have to put these transactions in context to get kind of the full picture of what's going on. So I hope you enjoyed the video. If you did, be sure to subscribe to the channel so that you can see future content as soon as I upload it. But that's it from me for this one, and I'll see you in the next video. Cheers.